On the 22nd of May, Kevin Warsh was officially sworn in as the new chairman of the Federal Reserve. The media is calling it a standard political victory, while internet rumors claim he's about to secretly wipe out America's national debt. Both sides are entirely wrong. The truth is that a massive trap has just been set for regular investors. The financial system just changed the rules of the game. The truth is that you will need to understand the new framework and adopt a new playbook to navigate the markets and your finances. Right now, the financial world is split down the middle into two separate camps. Watch the facts here. Which side are you betting on? Camp number 1 believes Kevin Warsh is a financial hero who is going to rescue the US dollar. For over a decade, the Fed has acted like a runaway money-printing machine, artificially buying up trillions in debt, injecting massive liquidity into the system, propping up and fueling the stock markets to record highs. Warsh has openly called this a broken policy. He wants a massive regime change to aggressively shrink the Fed's bloated $6.7 trillion balance sheet. To the optimists, this means the era of expanding valuation multiples is coming to an end, and true market discipline is returning. If your capital is positioned in strong cash flow, value-driven assets, this leadership change could serve as a major tailwind. However, if you are heavily exposed to the speculative growth stocks that relied on the ultra-loose monetary conditions to power the stock prices, you may need to recognize that the historical liquidity safety net is fundamentally changing. And there is camp number 2. Their warning is terrifying. They look at the White House ceremony where the administration said to Warsh that he will be totally independent.
Don't look at me, don't look at anybody, just do your own thing.
The skeptics believe that this is an absolute lie. They argued that Warsh was hand-picked by Trump himself. He was appointed to slash interest rates, loosen monetary policy, and help fund massive government spendings and reduce the fiscal deficit. If this camp is right, the Federal Reserve's independence is dead. It means your savings are going to be systematically melted away by inflation eventually to bail out government debt. It means the purchasing power of your paycheck is about to take a structural hit. The hard truth, no matter which side you stand on, the new Fed chair, in reality, already has his hands completely tied. The ongoing war involving Iran has totally choked global energy corridors, forcing oil prices much higher than just before the war. This is a supply shock. If Warsh bows to political pressure and cuts rates to make the stock market happy, he risks sparking a hyperinflationary currency crisis down the road. On the other hand, if he acts like a hawk and keeps rates high to combat elevated price levels, he risks slowing down the entire economy. The outgoing chair, Jerome Powell, didn't actually leave the building. In a move that breaks an 80-year central banking tradition, Powell is keeping his voting seat as a Fed governor until January 2028. He claims he's staying to defend the Fed's independence against intense political pressure. But macro insiders know what this means in reality. It denies the White House a vacancy to appoint another ally, and it gives the central bank a powerful internal faction to push back against Warsh's rapid reform agenda. The Federal Reserve Board is fundamentally fractured, and the central bank is officially at war with itself. The old financial playbook is officially dead. Are we moving into an era of tough love that forces real discipline back into the economy? A regime change? Or are we looking at a captured system that will inevitably inflate our currency just to stay afloat? Share your thoughts in the comments below. How are you protecting your money for this transition? Thanks for watching. This is Secret Capital.